On Tuesday, we warned the return of the U.S. market could mean a reconsideration of the moves that happened in its absence, and this has been what's been going on with the U.S. market, less inclined to be wanting to extend the U.S. dollar's run. In fact, heading into the Wednesday close, a day that started with the dollar bid across the board, the day was set to end with the dollar nearly down across the board. The only notable market that could not recover was the U.S. equity market, though this one has been begging for a pullback for quite some time. The big story on the FX front was, of course, the pound, a late mover, but a big one in that after the news broke on the wires that the British and German governments had abandoned key Brexit demands, and that, according to sources, the Irish border was the last major hurdle to a Brexit agreement. And so it was quite the 180 for the pound, which, as per our technical insights, managed to hold up on a close basis above 128 to keep prospects for additional recovery out from the 2018 low intact. There were some conflicting reports at the time of this update into the close, which triggered some profit taking. The Canadian dollar didn't seem as much as movement as it could have had on Wednesday after the Bank of Canada left policy on hold and maintained the outlook, offering no clear hints of any rate hike in October. We also didn't get any new updates on the NAFTA front, something that could have been another source of volatility for the loonie. Getting back to the technical, we would highlight the daily Ichimoku cloud on the euro chart. A break above the top of the cloud would have the euro back in an uptrend for the first time since April. This could have a major impact on momentum in the FX market and fuel a more significant rotation out of the dollar. The top of the cloud comes in just ahead of 117 right now, and we think a daily close above the figure will be enough to turn heads. Looking to Thursday's calendar, key standouts come in the form of Aussie trade, German factory orders, and U.S. data including ADP employment, initial jobless claims, U.S. factory orders, and ISM non-manufacturing. That's all for now.